Hello, everyone. Good afternoon. I hope your lunch was great, and I'm happy to be here again a year after. I was also in this conference a year ago, also giving a talk on compliance, yeah, I'm glad to come back to this place and to this conference. My name is Marina Khaustova. I'm CEO of Crystal Blockchain, and you may have heard about Crystal. It is a blockchain analytics provider. We are developing a software that allows compliance teams and investigators to understand how digital assets are moving from one owner to another, and this gives a comprehensive understanding of how the ecosystem works and operates. And today, my goal is to speak about the important aspects of the changes and challenges that compliance space undergoes. Because, of course, it is challenging, and there are two big camps right now, one camp is saying that compliance is designed, to enhance and make it the surveillance much worse, and it really oversteps sometimes. And there's another camp which actually observes the data and understands, the cases where compliance was really effective, and also thinks how to deploy compliance solutions for the good of the business overall. And I myself, I had a very unique opportunity to actually observe how the space of businesses deploying compliance solutions have evolved over time. Because if we scroll back 5 years, in 2018, I was based back then in the United States, in Los Angeles, and I was running an investment bank, an advisory company that was helping blockchain companies to actually structure, to strategize their way forward, understanding all the upcoming changes in the regulation. And I must say that 2018, in everyone's memory, looks like a really wild west, for cryptocurrencies, where everything was happening and regulators were not yet there, but already there was an understanding that something is going to happen, definitely. And I found myself in a very specific position where, I looked at 95% of the businesses that were coming to me for advice, and I had to tell them, no, I cannot work with you. And I became very famous because of that, because I understood that these guys are not going to invest into any compliance measures. They are not going to think about how their business is going to survive what's coming. And it was very clear what was coming, right? I looked at these people and understood that, a lot of them will get sued, or their businesses are going to get dissolved. And it's just inevitable. And I must say that it was not a very popular stance back in the days, but it led me actually to Crystal, actually, because there we decided that we have to solve this problem on a completely different level, right? We need to think about how to make sure that monitoring what your business does on the transactional level can be easy and can actually power up a lot more opportunities for the financial institution moving forward. And yeah, so that realization for me really was a catalyst to figure out, what the mission of the true compliance solution should be. And here we are now. We are a team spread between Netherlands, UK, and Ukraine. When we are serving financial institutions and law enforcement around the world, helping them again combat crime related or originating from digital assets. So yeah, that's where we're coming from, and that's where I'm going to be bringing my stories from and my observations. Of course, being at this conference is really a privilege, because I don't need to convince all of you that, digital assets are here to stay, or, that they're having a lot of benefit and really should jump into that. We already are there, and the adoption is definitely happening. And it's very, very clear that there are a lot of benefits related to digital assets or cryptocurrencies that are being adopted right now by bigger financial institutions. Of course, speed, right, efficiency. We also see a lot of benefit right now finally in transparency, since we understood how we can employ that correctly, right? In general, again, overall, the idea of jumping into digital assets has been picked up by many traditional financial institutions around the world. And some of them are, more active than the others. Of course, they are moving very, very different space. But of course, we are being in the middle of this tightening storm of the regulators deploying new frameworks and, trying to actually connect what is happening right now in digital assets to what was happening in the financial markets before. So what is changing over this rapid course of evolution? I wanted to speak exactly about that. So if we look at the traditional compliance, we'll see certain pillars, right? Certain actions or certain, baselines, right? That define this space for us. So we, of course, see the regulatory oversight, right? Of course, there are certain laws or legal frameworks that are adopted, and you have to follow that. Then you have a risk management. Of course, you need to invest into the systems that actually prevent your business from interacting with illicit actors, and actually be an active player, right, in this space, combating this fraud and like. The third pillar, of course, is AML and KYC, right? We are legally mandated to know more about the customers and to track their activities and to connect their actions with their persons. Next, we have reporting and transparency, of course, and that is already being regulated and deployed for traditional financial institutions and stock exchanges for a very long time, very strict protocols, strict procedures, and the like. So, all these I want to finalize and round it up with the ethics and, of course, integrity, which is always has been a very important part of all the compliance measures, right? You need to think about of the interest, of the whole industry when you are deploying certain actions. So it looks sound and stable, right? And it was designed to fit a very specific model, and this model actually has been somewhat disrupted by the appearance of the cryptocurrencies. So what is happening? How these pillars are being challenged when we see them, when we see cryptocurrencies emerging in this space? So first of all, regulatory oversight. We all know that cryptocurrencies exist in the borderless space, right? They are, of course, we can attribute them to certain entities or certain exchanges that have, registration or licenses in certain territories. But overall, again, to control how cryptocurrencies are moving from one country to another is largely very hard task, I must say. Second, risk management. Of course, we can try to deploy as much, as many risk scenarios as possible. But maybe you heard about what happened yesterday. Anyone saw that one crypto media, just falsely reported on Twitter that Bitcoin, or the Bitcoin ETF was approved by Securities Commission for BlackRock. So that immediately caused a huge volatility on the market, and Bitcoin spread. I think it was immediately the price jumped up 3,000, and then it of course went back. And overall, the disruption on the market was quite strong. Of course, that speaks a lot about the power of the media in this space, but it also talks about and it contributes a lot into this question of what kind of risk measures actually can be adopted by financial institutions when we can see such cases happening and such big disruption caused by that. Next point is, of course, AML KYC. Yes, this is, of course, present, and this becomes, a very important step for any compliance procedures, but then it's layered on top of that with KYT, which is Know Your Transaction. You need to employ much more efforts to understand what your transaction, what is this activity particularly related to, right? You need to employ travel rule and talk to other entities and monitor overall the activity, collecting more and more data about the particular customer. Reporting and transparency. That's a pain point to me, I tell you, because unfortunately, while there is a framework that can be adopted for traditional financial institutions, not all of that can be actually transferred into crypto world, into digital asset world. And I see a lot of our customers also struggling with that. They understand that they need to file suspicious activity reports. Okay, they do that. And they do this in an enormous pace. A lot of those, I mean, dozens being filed, maybe filed during one day. But then what happens next? There is no actually feedback coming from regulator about what are the norms, what is good and what is bad and what should be happening. And a lot of customers from various jurisdictions are telling that this is clearly something where we don't see yet a very well-developed framework existing. Ethics and integrity, that's another also big problem, or at least controversial topic, I must say. Of course, we need to think about preventing money laundering. We need to think about preventing sanctioned entities to interact and sanctioned money to actually flow. But the problem is that in crypto space and in digital asset space, heroes turn to villains very fast, in a matter of literally a few days. Some of you also remember FTX and what was happening with them. All investors were saying this is a great exchange and they have a bright future and the founders are great. And then the collapse of FTX literally took several days to unfold, and what we see right now, no one could actually oversee that. How that could be prevented, right? What kind of risk measures could be adopted here? Unfortunately, only clear observation of the data related to the entities, and there are solutions who can empower you to do that. All of that is not happening, of course, in vacuum, right? We, of course, see regulators that are picking up and they are actively insist that digital assets don't need to be banned. Instead, financial institutions should take this initiative and design the best frameworks and then share these frameworks and then propagate, the best practices on the market. And this is happening, of course, overall, I see very slow. And second, there are still a lot of unresolved issues. So we, of course, have in Europe GDPR framework, right, which says that every user has a right to retain back the information related to this user. And then, of course, if you are comparing GDPR to the records that are stored on the blockchain, you see this problem that is still there, that is still not resolved, that it's not technically possible, of course. So we somehow need to think about these two frameworks or how they exist and coexist. Local regulations and global and international organizations deploying frameworks, starting from FATF and then spreading into the local regulatory bodies. Of course, huge work has been completed up to this point, and I very much appreciate, the fact that there is a cadence established, for these new recommendations and guidance that is published. However, there are still big areas that are not yet covered, right? NFTs, DeFi, that is something that we are yet to see. So on top of that, I must say that regulators expect companies to spend more resources and more forward thinking about what can be prevented in this space. And that puts a lot of customers of ours and a lot of financial institutions into a much more questionable state, like what we should do actually to prevent that. And what I see happening right now is what I call a digital facelift of compliance, because we see how deploying compliance right can actually help your business accelerate and expand to additional territories. If you're a new business, of course, that means a lot of costs associated with that. But it actually means trust and transparency for your potential investors. Then you are going to new territories, and sometimes the requirements can be super controversial, not to mention the gambling, which may have different stands for different territories. But my opinion is that blockchain analytics, who is right now utilized mostly to cover compliance questions, should be able to provide much more information vital for the businesses to operate, much more information about the ecosystem where they are present and who do they interact with. Because the bad actors and the illicit players, they're also running super fast. For example, on this slide, I wanted to share with you a very recent scheme deployed by advanced criminal organizations who are trying to actually somehow confuse blockchain analytics companies. They are trying to infuse signals that give us wrong direction, and actually we need to spend much more time understanding what is exactly happening. And this means that, again, the space has become quite prominent, so that even big criminal organizations are now including these strategies on how they will deceive and confuse blockchain analytics companies into their plans. And if you think these plans don't exist, you are wrong, because, of course, looking right now at the major Ponzi schemes and scam schemes that are being deployed, we see that every case of stolen funds have involved a massive amount of work done to actually understand how the funds can be laundered further. So that means major decisions, made before the action has been taken. And important part of this decision is actually how these funds are going to be taken out in fiat currency. What exact entities can support that, and what legislations and what jurisdictions, are less likely to be observed and more likely to support that. So. I see a lot of responsibilities and challenges for the compliance teams at this moment and for the compliance solutions, and I wanted to cover that. Of course, next year, everyone expects markets to liven up and a lot of activity to start happening. And that is related, of course, to layer 2 solutions, which mean magnitude more transactions happening in an asynchronous way. And there are still debates whether or not we'll be able to monitor and track that to actually sustain the illicit actions. But not only that, of course, data integrity becomes much more important. You cannot right now rely on the information that is found on the forums, right? You need to be able to prove that your information that you have is actually real, and you should be able to stand, in front of the court with this data. And the third call is that we really need to move fast, because right now speed is the essence. Otherwise, we won't be able to stop stolen funds from being effectively laundered and taken out of the system in fiat. So yeah, a lot of responsibilities for all of the stakeholders in this space. I must say next year I see as a pivotal one for blockchain analytics solutions and compliance solutions. And a lot of entities should coordinate, because right now, I see that average time for a person who has been scammed or has lost funds, for example, in Dubai, and he got to police and reported this case to police, average wait time for him is 6 months. Of course, you understand, right? This doesn't help anyone. And a lot of stakeholders should coordinate and take responsibilities that belong to them. So yeah, happy to speak to you after this presentation. You may find me in this space today and tomorrow about crypto compliance and about the trainings that we can give to you and your teams. And thank you for your attention.